Just earlier today, SoFi had a big run. It broke through $20 per share. This is what a lot of SoFi bulls have been waiting for because the stock just in the last month alone is up 41%. And in this video, I'm going to be sharing some reasons as to why I think this can keep going and why I think SoFi can blow past $25 per share this year and possibly even hit all-time highs. Let's jump right in. Okay, so I wanted to talk in this video about some stock news that we had over the past week or so, as well as news that came out today with regards to this Fundrise ETF. But I also wanted to talk about some catalysts that we have for SoFi going forward, simply because we're going to have earnings coming up very shortly. And I just wanted to refresh my audience on what to look out for. So, first of all, we know that SoFi runs leading up to earnings. The stock is up 41% in the past month alone. And I think that a couple things. I think number one, it could chop sideways for a little while because $20 is a psychological level. Although the stock, broke past it earlier today, it did in fact close under $20. A lot of it is going to be driving the macro. I just saw an article that came out that said Trump is announcing more trade deals tomorrow. So the entire market is going to be green tomorrow if that is in fact the case. But I think that in order for it to be sustained, moved upwards, that you need a rest. You need to be able to build a base higher. And the fact of the matter is that SoFi has been up 41% in the past month alone. It had a previous base at 18. It fell back down into the 13, 14s. And so I wanted to build a sustainable base of buyers that accumulate in the $20 range so that we can see that psychological level flip from resistance to support. Of course, earnings is going to be the make or break. And I think that a lot of investor eyeballs are going to be on earnings as we get closer to that date towards the end of July. Ultimately, over the course of the year, I could see this trade at all-time highs above $28.50. And I think if that does happen, it will bode very well for the company over the long term, because what's going to happen is that name, that ticker symbol is going to hit screeners. It's going to hit algos. They're going to pick up for it for the first time. There's going to be new investors that are having a renewed interest in SoFi because it's going to hit their trading terminals. And a lot of people who have overlooked SoFi for years will be coming back to the name, just given the stock price action that the stock has had over the last little while. And so I think that if you see a movement in the $20 range, and especially if you see something in the all-time highs, high $20, that you can see a lot of institutions, a lot of new investors starting to open a position for the first time for the next leg higher. And I think that's something that can get SoFi out of this funk, out of this groove where it goes up and then it just comes back down again. So we'll see what happens, right? I think some tailwinds, obviously, at the company's disposal is we just had a recent bill. Bloomberg News reported on this. It's basically a new tax bill that's set to benefit private student loans, including SoFi, which could see a jump in the demand. And I think this is one of the reasons why the stock has been running. SoFi has approximately 60% of the private student loan refinancing market. And of course, individuals needing bigger loans or graduate program loans like MBAs and such would most likely be affected by this bill because they'd be requiring reassistance from student loan providers. So of course, SoFi is going to see some tailwinds from student loans, not just from rates coming down, which we'll talk about in just a second, but also from this tax bill that was passed. And this was the big, beautiful bill, essentially, that went to the president's desk by July 4th, which we all know about. The other thing is rates, right? The macro perspective is we're expecting many rate cuts this year. I think the market's expecting like 2.6 rate cuts. So we're still on track for 2 to 3 rate cuts. And that is going to be an interesting macro environment because obviously student loans is going to see a further tailwind as a result of that, but also home loans are going to see a tailwind as a result of that as well. Powell and Trump are sort of on the rocks. And as we know, Powell is likely going to be out soon. And, we could see further rate cuts even more in the coming years as a result of that, as Trump is pushing to have further rate cuts. But that's macro, and that's a little bit further away, and that's also subject to change depending on how the macro environment evolves. If we zoom back into the next earnings, the loan platform business is ramping up. In the last few firesides, management has mentioned that they're accelerating and that they will continue to accelerate the loan platform business in Q2 and beyond. SoFi right now is a company that's putting up 40% growth rate, and that continues to accelerate. And if that does, through the loan platform business, that's going to be very beneficial for not only the stock, but also for the company prospects and awareness on a retail shareholder and also an institutional shareholder perspective. In addition to that, they have crypto and stable coins. I mean, they had this big news around crypto, which they released the waitlist for crypto returning into SoFi. And maybe we're even going to get an announcement on earnings on an updated timeline as to when we could expect that crypto. They also had international remittances and they had stable coins about Galileo and SoFi. So I think that a lot of that is excitement in the market. Another catalyst to look out for is Crypto Week, which is coming in middle of July. We're expecting some further stablecoin announcements there, not from SoFi, I mean, from a macro perspective, and that's only coming up in another couple of weeks. I think guidance is going to be strong. I think there's weak comparables that SoFi is running up against. And we also had this news earlier today around SoFi expanding their access to private markets with funds from Cashmere, Fundrise, and Liberty Street Advisors. This article was released on July 8th, earlier today, that they've expanded access to alternative investments through new private market funds from a couple of different asset management firms, including Fundrise. Through these funds, investors on SoFi's Invest app can gain exposure to multiple private companies across AI, machine learning, space technology, and others. Companies like OpenAI, SpaceX, Epic Games, and more. In fact, over here, I have Fundrise's website pulled up. You have Databricks, Anthropic, Canva, Vanta, Anduril, and a whole bunch of other names. And what that means is SoFi investors are going to have the ability to invest in the hottest private companies in the world, which is obviously bullish, right? That's obviously fantastic. The other thing to keep in mind is that as the company continues to climb in their stock price, you have to keep in mind the performance stock units that the management team has. Of course, management has PSUs, which is their main incentive. It's like a big bonus of stock that unlocks at certain price targets, and those kick in June of 2026. And while that might seem like a year away from today, the stock has to hit a certain price, but also maintain that price for a period of time. I think it's 30 days in order for management to get that incentive to get issued those additional shares and basically have a massive payday. The tranches there are $25, $35, and $45 respectively. So basically, management is incentivized to take SoFi to $45 per share in the spring of 2026. And that's obviously very bullish. Now, of course, they can still renegotiate with the board and push those deadlines out even further if they feel that they are unable to hit them by 2026. But if we're holding true to this idea of $45 in 2026, then the stock needs to get a move on as early as right now. And so this stock up to $20 a share can be a motivating factor for management to basically be within striking distance of that highest tranche of their bonus. Because if the stock was at $11 in 2026, management will not be that incentivized because the stock has to do like 4x in 2026 in a couple of months. But if the stock is, let's say, at $30 per share and has to go at 45, then management will be much more incentivized because their target for the highest tranche is already within reach. The other thing to keep in mind here is index inclusion. Now, obviously, this is not going to happen until the end of the year, but with SoFi over $20 a share now, it is a range that fulfills the market cap requirements for S&P inclusion. So we'll see what happens, with regards to inclusion, because now SoFi has reached the profitability requirement, and they've also reached now the market cap requirement to be included in the S&P 500. Of course, if and when they are included in the S&P 500, you're going to see a massive influx of capital flowing into the company through pension funds, index funds, retirement, so on and so forth. And that's going to be a big catalyst because basically every name that goes into S&P 500 gets pumped through that influx in capital. And SoFi is going to be no different, but it's just a matter of when are they going to be included and how far down that wait list are they. So it could happen at the end of this year, but chances are it's probably going to happen in 2026, but they have to maintain this range to do so. And the only reason I mentioned it in this video is because they are within that market cap requirement now. But ultimately, and to wrap this video up, one thing that I've been repeating multiple times over is that good management teams and good fundamentals matter, even if the price remains detached from reality for an extended period of time, like we saw with SoFi. The price remained detached from reality for years. And throughout that entire time, the market was not giving this company the respect or the valuation that it deserved. And that entire time was, in fact, alpha for retail investors to accumulate more shares. The market was allowing investors who believed in SoFi to basically accumulate shares at a low price. I mean, my cost basis on SoFi is in the single digits, and I've been writing against the stock, so my adjusted cost basis is like $5. And the only way I'm able to do that is because the market allowed me to accumulate for a long period of time before the breakout. And all of those investors who were buying alongside me in the single digits have now been rewarded. We've hit a nice psychological milestone, crossing over $20 a share. Of course, the mission is not over, the mission is just beginning. But what we're seeing right now, and it's important, is we're seeing the stock catch up to what the fundamentals have been doing for years and years and years. The fundamentals are growing, and in fact, they're accelerating. And now we're finally seeing the stock catch up to that. Of course, I'm going to have a full earnings breakdown for SoFi in the next couple of weeks as we get closer to earnings. That's going to be the next thing that we focus on for this company. Very exciting. This could fall down again into the 17s to $18 range. I wouldn't be surprised. I think we might be trading sideways given the psychological levels, but I think that if the macro keeps up with the crazy velocity and the speed at which this move has happened, I think it could even continue to go higher into the low $20 range. So we're going to see what happens. But I'm just along for the ride at this point as a SoFi shareholder. I've accumulated my position. I'm pretty happy to be a holder. I mean, it's 30% of my portfolio. So days like today are always a treat for me. Thank you so much for watching. And if you've been watching for years and holding SoFi for years, let me know in the comments below because this is just as big of a day for you as it is for me. And I'll see you in the next one.